Good morning, everybody. Wonderful to be here. I'm going to follow on from that very interesting panel. I'll stand on my tee here and talk to you a little bit about the numbers behind what those guys are talking about. So frankly, I love conversations. They're always inspiring and interesting. You see what's in an executive's mind. But they're often working to numbers. So I'm going to try and provide some numbers and context to what that discussion was just around. So we will talk about 1.5 degrees. Whether you believe we're on track or not, that's another matter. But on the US Inflation Reduction Act, that has made a big difference. But equally, when you talk to US government officials, you will find that they say, we still need to do more. Well, okay, what does that mean? What do they have in their mind when they're trying to do that? What you've got on the chart here is 1.5 degree climate scenarios and the ratio of low carbon investment to fossil fuel investment out to 2030. It's a range because there is more than one scenario, of course. But the minimum that theoretically we're aiming for 1.5 degrees is 4 to 1. 4 to 1 low carbon investment to fossil fuels. As you can see, we're actually at about 1 to 1 right now, which could be a bit depressing. Good news, there's been quite a bit of a change in the last 7 years, driven by low oil prices, bringing fossil fuel investment down, and very low clean energy prices taking low carbon investment up. So it's a good story, but obviously more to do, as we often say. Global numbers. Great, but we all know that the globe is not singular. Every country, every region is a bit different. So same ratios, same forecasts, broken out by region. And as you can see, historically, everywhere's a bit different. In the future, according to these scenarios, everywhere needs to be really quite different. So at the top there, you've got China aiming for a ratio of around 24 to 1. At the bottom, you've got Eurasia, Russia, Kazakhstan, Azerbaijan, aiming for a much lower thing of around 2 to 1. Now, why might this be? Well, it's easy just to say modeling assumptions. But there's a deeper truth here. This is the same ratios, just left to right. More low carbon investment on the left, more fossil fuel investment on the right. And the pattern aligns very closely with fossil fuel exports, right? So on the left-hand side, you've got the net importing regions. On the right-hand side, the net exporting regions. Naturally, a very strong correlation between the two. So the short story is, even in 1.5 degree world, if you're aiming for that, if that's what you're going for, and if that's where you believe we're going to get, fossil fuel consuming or importing regions are still going to have to do a lot there, but they're going to have to invest substantially to reduce their fossil fuel imports. Even so, fossil fuel exporting regions are still going to export a bunch of oil and gas. And I think that's pretty par for the course. If you're an energy market participant, you just know this. That's fine. It's kind of par for the course. If you're a climate diplomat, you kind of need to be reminded of this occasionally. Okay? But what does that mean for EM&Ds? The title of this talk is around EM&Ds. The closing bits of that panel started to look ahead to COP and some of the movements that are happening there. The annual energy supply investment in EM&Ds, a big broad set of countries, as Mark mentioned, is intended to be around $1 to $2 trillion by the end of this decade. Again, if you think in terms of ratios, as I increasingly do, you're looking at around between 2 and 4 to 1. Big range, different modeling assumptions, different scenarios. Where are we now? Well, in 2022, we're at around 600 billion of total energy supply investment, fossil fuel and low carbon energy, at a ratio of around 0.4. So quite a substantial shift. How big a shift? It's around 5 times. So you need to increase low carbon investment by around 5 times over the next 2-3 years. Fairly substantial challenge. Probably not impossible, but fairly substantial. As you think about if and how to do that, it's really good to then say, well, what are EM&DEs? I personally hate the term. I think it's an unusual construct, partly because it masks this incredible diversity of countries, right? This is, if we just look at the fossil fuel investment, This is the sort of the last 7 years on the left-hand side, broken out by World Bank Income Group. Okay, and as you can see, I guess, what is that? About 50% is upper middle income. And as you can see on the top right, there's a very substantial, increase in investment in certain countries. But more importantly, it's a massive range of different countries. This is a very diverse group. So what does this mean if you're thinking about increasing low-carbon investment? Well, low-carbon is a slightly different story. This is renewables, so a subset of low-carbon, again, with the World Bank Income Group. Interestingly, hold the thought on 2022. We'll come back to that in a moment. But for 2018 to 2021, essentially you're seeing around 50% of investment go into lower middle-income countries, which is quite different to the previous slide. So different set of countries are investing in low carbon to those investing in fossil fuels. Now, pretty obvious that's based on resources, but also it shows that the resource is 50% is in lower middle income countries. Okay? Now, quite a bit of that is driven by PV, solar. I saw this chart yesterday and I thought, my God, this is quite profound, actually. In, 15 years, you've gone from 4% of all new power generation across the world being solar to 59% last year. 59%, all new power generation. And in EM&Ds, that's actually not that different. It's 46%. Lots of others, wind, etc., a bit of coal, but predominantly solar. So, off the back of this, you think, well, what can we, we can theorize, we can say what we'd like to happen, but what is actually happening? And what can we confidently state? Well, we can confidently state a few things. One, global energy supply investment is slowly turning a corner. We've had that big shift over the last 7 years to low carbon. We'll see how fast or much further that changes, but that's been a big shift. Second, we just need to remind ourselves that fossil fuel exporters will continue to play an important role. That's just part of the course. But also, and this is the thing, fossil fuel importing, including lower middle income countries, have a new opportunity to reduce import dependence and spur economic growth. And that is, when I say new, I mean new in the last 7 years, right? But in the energy supply matrix, that's still kind of new. And whoever you are, it genuinely is time to get ready for solar. Okay, so I leave you with those thoughts as you come on to the next panel. Thank you very much.